It's 1 week after the successful presidential and National Assembly elections and hours after the President-elect Muhammadu Buhari was appointed the winner of the election. The Nigerian Stock Exchange rallied by 8.30%, breaking market records. Hello and welcome to Capital Markets. I'm glad you could join me. I'm Temple Ashaju. It was a 4 trading week, as the federal government declared Friday the 3rd and Monday the 6th of April as public holiday to commemorate Good Friday and Easter celebrations. Meanwhile, equities performed more than just bullish during the week as the peaceful presidential and National Assembly elections inspired investors to return to the market, turning over a 16.90% appreciation for the all-share index and 17.60% addition to the market capitalization week-on-week. All the sectoral indices recorded week-on-week gains, with the banking index gathering momentum by 23.97%, and Fidelity Bank, Zenith, as well as GT Bank were the major contributors to this index. The NSE 30 also had a share of the bright side of the market with 17.91%, as positive sentiment in the oil and gas gave a 16.42% increase to that sector. Now, the margin was driven by Owando and mobile oil contributions for the industrial goods and consumer goods sectors. The indices leaped by 13.62% and 16.42% respectively. Now, Market Prt significantly improved as 72 equities appreciated during the week, higher than the 50 recorded in the preceding week. On the flip side, 6 stocks depreciated in price against 21 recorded last week. Fidelity Bank, NACO, Zenith, Owando, and Guarantee Trust Bank were the top advancers of the 4 trading session. However, for Madeco, Forte Oil, Vono Products, Red Star Express, and Transcorp Hotels ranked as the top 5 losers of the week. Meanwhile, there was a turnover of 2.63 billion shares worth 36.58 billion naira in 21,393 deals this week. Trading on FBN Holdings, Guarantee Trust Bank, and Access Bank accounted for 834.16 million shares and contributed 31.70% to the total equity turnover, volume, and value of the market. We have 2 guests in the house: a stockbroker with Global View Consult and Investment, Sam Ine, and an investor, Badebo Olatokumo. But we will go on a short break and come back to review the market performance for the week with our first guest. Stick around. Welcome back. If you just joined us, you're watching Capital Markets coming to you live on Channels Television. You can send your tweets at Tempili. I will be glad to receive them. Now let's begin the conversation on the program as I am being joined by an equities trader with Global View Consult and Investment, Sam Ine. Thank you very much for joining us on the program this evening.
My pleasure.
Now let's kick off with the rally in the markets. Tell us more about that rally. Was it because of the peaceful election, or it was because of the personality of the winner?
I think it was more of the peaceful election. If we look back, there was so much uncertainty concerning the presidential elections, and that had caused a lot of investors to take a flight to safety. And once the elections were concluded peacefully, orderly, you know, it sort of brought back the confidence that had gone out of the windows, and that is what you saw with the surge in the volume and value transactions, which led the market to record 8.3% growth in the ASI, which you did say in the introduction that it has not happened in the market in the last couple of years. So it was more because of the peaceful election, the orderly conduct, and the way it ended.
You agree that there was flights taken?
Exactly.
Where did this money go to? Was it outside Nigeria, or it was with the stock or with the investors here in Nigeria?
Both factors actually what happened. For the foreign portfolio investors, so the funds went out of the country, and for the local investors, the funds were domiciled with them, either in the banks or maybe it went into fixed income investments.
That's interesting. And now that the election is over, it's very easy for the investors to bring back their cash to the markets.
Exactly.
Okay, so investors have actually waited for the president-elect to come in with his policies, but then the policies have not actually been churned out. One will think that they ought to wait for the president to be sworn into office before they will start returning, massively as they did during the week to the markets.
If you want to break down the market, you want to break it down into fundamental analysis, technical, and then sentimental analysis. A lot of our actions are informed by the way we feel. The present sentiment has a lot to do with that. So because of the fears that were heightened prior to the election, and then the way the election had gone, so there was a need for celebration. So, and that informed why that, in quote, madness happened in the market. So at that point, it was not really a case of, hey, let's reason, what will the next government do? What's going to happen to fiscal policies or other policies? That wasn't the time to ask such questions. It was the time to celebrate. And that was just what happened. It was just a celebration.
So it was a celebration that actually necessitated that avalanche of investment in the market. Now, next week, we should be having, about this time next week, we'll be having the the governorship election. And one would expect that should also hold before we'll be seeing more investments being raked into the market like this. What's your thought on this?
Like I said, it's more of celebration. There's this slogan in the market that says, act before you think. And I think that's just what played out. Now that the euphoria is declining, then people begin to ask questions. So it's the answers that come out in response to those questions will determine what you're going to see Tuesday, Wednesday, prior to Friday. That will be the eve of the election. We do not expect this rise in the ASI to continue. It's very likely that the party will be over Tuesday or Wednesday. Say Wednesday, at best, because you expect profit taking to happen. You expect the earnings of a number of stocks to begin to weigh. If we take a quick run back, we know that the earnings of UBA wasn't that good. That of Dangote Cement was just a slight increase, in the top line, and then the bottom line wasn't too good, and you could see that with the dividend yield of about 3%. You want to look at that of Nestle, wasn't quite exciting. The only counters that did post beautiful earnings were that of Zenith, GT, say Custodian and Allied. If you look at Fitsin, the results a bit okay, but in the area of liquidity, they have some question marks because the working capital was negative. The cash position wasn't that good. So as questions are beginning to come on board and investors begin to look at the earnings, they'll begin to weigh negatively on the market, and you expect this profit taking to continue. So I think the party will be over very soon, Tuesday, Wednesday at best.